Hey everyone, in this video I'm going to make my case for why I think Zoom video communication stock is ridiculously undervalued right now. So I'll look at its latest quarterly earnings results, I'll look at its valuation, and I'll discuss longer term strategic benefits Zoom video still retains from the pandemic era boom it experienced in business, and I'll wrap it all up together to finalize my argument for why I think Zoom video communications, which is down 84% off its high right now, is an excellent long-term investment.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so let's start with the latest quarterly results. Now, management saying that in the first quarter they continue to integrate artificial intelligence across their platform, including Zoom Contact Center, Zoom Workplace, and their AI-powered collaboration platform. And of course, Zoom does not want to be left behind. Nearly every company nowadays is talking about artificial intelligence. I don't see a clear way where Zoom Video really capitalizes on artificial intelligence in its business, but nevertheless, they want to be involved in the AI discussion. And I don't blame management for wanting to do that given how popular artificial intelligence is nowadays. So, more importantly, Zoom Video total revenue for the first quarter came in at 1.14 billion, and that was up 3.2% year over year. And interestingly, what I noticed since the pandemic era boom that Zoom experienced was not a big pullback, right? Many investors were thinking that Zoom went like this during the pandemic and that its revenue would go like this afterwards. But that hasn't been the case. It did go like that during the pandemic, but instead of crashing back down, its revenue has just kind of stabilized and grown very slowly since that time. Customers that joined with Zoom haven't canceled, they haven't stopped using Zoom, but Zoom has had to work harder to secure sales. That's the big thing that changed since the pandemic. During the pandemic, when everyone and their cousin was using Zoom, they didn't have to hardly make any effort to make a sale. They just told customers, go to our website, click the buy button, right? That's all the support we're going to give you because we know you desperately need our product. Nowadays, they're having to work harder. They have to hire salespeople, they have to go out to customers, meet with them, offer them incentives, offer them deals, talk them into coming with Zoom, increasing spending with Zoom. They've got to put in more effort, but they are securing sales and they are generating some level of revenue growth, as you noticed here, 3.2%. And still, even though they're having to work harder, the business profitability is booming. Income from operations for the first quarter was 203 million compared to just 9.7 million in the first quarter of fiscal year 2024. As a reminder, Zoom Video is already in its fiscal year 2025, and so they're comparing with last year, first quarter 2024. And then net income for the first quarter came in at 216 million compared to just 15.4 million in the same quarter the prior year. So the company's revenue growth is increasing. The company's generating strong profitability, and it feels that its stock is undervalued, just like I do. I feel Zoom Video Communication stock is undervalued. Management feels the same way. They repurchased approximately 2.4 million shares of their own common stock. Typically, when I see this from management, it signals that they feel that their stock is undervalued. Otherwise, why would they go out and spend capital to purchase their shares? So that's a clear sign that management believes its shares are undervalued. And just as a reminder, coming into 2024, I did have Zoom Video Communications rated as a top 25 stock to buy. And I've reiterated that recommendation all year long. And I last updated this on April 30th, reminding investors that I still liked Zoom Video Communication stock as one of my favorite top 25 stocks to buy right now. So moving on, in addition to solid revenue and profit expansion, Zoom has a pristine balance sheet. As of April 30th, it had $7.4 billion in cash and market securities and little to no debt. Now, the company can use that $7.4 billion in cash, invest it in super safe government securities, and at roughly 5%, they can generate roughly $350 million in annual interest income. $350 million in annual interest income just by investing that cash. They can also use that cash to repurchase shares as they have done. They can also use this cash strategically to offer better incentives to customers to sign up with Zoom. For instance, they can tell customers, we'll let you sign up with us and you don't have to pay us until the end of your 1 year of service with us. So instead of having to pay upfront for 1 year of service with Zoom Video, they can let customers pay at the end of the 1 year, which makes it a lot more favorable to its customer. And since Zoom Video is in no urgent need of the cash, it doesn't really hurt the business. The only opportunity cost is that Zoom Video could have used that cash to earn 5% in super safe government bonds. So it would just need to increase the price by that amount or similar fashion to secure that sale. Also, cash flow from operating activities came in at $588 million for the first quarter. That was up from $418 million in the same quarter last year, or an increase of 41% year over year. Free cash flow came in at 43.6% higher than the same time last year. All very, very strong increases year over year for a company that only grew revenue by roughly low single digits in the most recent quarter. Moving on, trailing 12-month net dollar expansion rate for enterprise customers came in at 99%. A figure of 100% means that customers that were with you for 2 years, they on average spent the same amount this year as they did last year. So they're not seeing increases in enterprise customer spending. And that's understandable given that over the last year, more businesses shifted more towards working at the office, right? We've seen a lot more of businesses calling people back to the office, whereas last year it was more of a hybrid environment, 3 days at the office, 2 days at home, a lot more companies allowing remote work. This year, a lot of that reversed and companies wanted people back to the office. So the overall use for Zoom Video decreased year over year. Now, that was to be expected as businesses reopened more completely and businesses brought back people in-house. But still, they didn't eliminate Zoom Video from their business. They're still going to use Zoom Video throughout the business. Of course, not as much as they did when people were working from home more often, but it's still going to be a vital part of many businesses worldwide. It's just so much better in terms of saving time of travel. If you need to meet with somebody instead of having to travel, you can meet with them through Zoom Video, or you can have employees work from home more often and using Zoom Video if you need to meet with them. That provides a huge benefit. I still use Zoom Video extensively for my university teaching. It is favorable to myself and to my students. Students would prefer not having to come to campus to meet with me. They'd rather have a Zoom Video meeting. And I would prefer not having to drive to campus to meet with students for an office hour or for a special meeting or for anything. They might want to meet with me. If we can do it over Zoom, it benefits both me and the students. So we still use it extensively at the university, and it provides huge benefits to all those involved. Now, the company is saying total revenue for the next quarter is going to be between 1.1 and 1.15 billion, roughly the same where it was in the first quarter. And for the year, it's going to come in at roughly 4.6 billion. So slightly accelerating revenue growth for the rest of the year. Solid growth, right? No one is expecting Zoom to grow by double digits this year. No one is expecting that longer term from Zoom, not in the near term after it's digesting a lot of the customer acquisition during the earlier stages of the pandemic. So Zoom Video is trading at a forward price to earnings of 12.69 and a price to free cash flow of 13.31, which I think is ridiculously cheap for a company with its profile, with its profitability, with its balance sheet, and with its installed customer base. That's the big strategic imperative benefit from the pandemic that I think investors are underestimating. Think of how many people downloaded and used Zoom video communications during the pandemic. That installed base, that know-how from customers is a strong benefit for Zoom video longer term, as it'll make customer adoption easier. Businesses would be more willing to adopt Zoom video because they know their employees have experience or very much likely have experience with Zoom video. So the implementation process will be much easier than going with the competitor, someone else offering similar service where the wide majority of the population doesn't have as much experience with as they do with Zoom. So for all those reasons, I think Zoom video is an extremely undervalued growth stock that investors can buy today. And I'm reiterating my top 25 recommendation for Zoom video stock following this earnings release on May 21st. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.